Welcome back. Today we're talking about Fvgs gaps and how you guys can use Fvgs gaps to actually have a bulletproof system. A lot of you guys that trade or watch my videos, I'm assuming a lot of you guys are supply and demand zones, SMC traders, ICT traders, or even Elliott wave and retail and all that. A lot of you guys are stuck in this phase where you guys are in this break-even loop. So when I talk about Fvgs gaps, I need you guys to pay close attention. If what I talk about makes sense and resonates with you guys, I do highly recommend joining the Discord and actually understanding the system fully. There is a lot of things I keep private for my students, and I only choose to release certain information to the public. When you guys are looking at price, a lot of you SMC traders, you guys are most likely looking at, break of structures, and this has a break of structure, and you guys are marking a demand zone that's unmitigated, and you guys are shorting to that when there's a 15-minute change of character and all that rubbish. And you guys still have that system of break of structure, demand zone, the break of structure, demand zone, right? You know what I mean? Break of structure here, and you guys are missing a lot of trades here. Maybe you're marking this one here, maybe even take this one here. I'll give you the benefit of the doubt, right? But as price continues to expand, price does not mitigate our demand zone. And I'm sure a lot of you guys aren't even marking the 1 hour Fvgs gaps or 1 hour demand zones, okay? But the context I want to provide to you guys is understanding where market goes contextually and how Fvgs gaps are used in this process. Fvgs gaps are present when price is expanding. So when you have this beautiful expansion just like this, right, there's going to be Fvgs gap mitigations. That's what you guys need to understand. So if there's no expansion, our Fvgs gaps are no longer in control of the market. If our Fvgs gaps are no longer in control of the markets, that means we have a 50-50 bias. You guys should only be trading when you guys know absolutely what your bias is, bullish or bearish. There shouldn't be a bullish and a bearish bias. Okay, don't try trading like these gurus on Instagram catching this 600R and all that rubbish, right? It's a fallacy. When you guys have a system that is bulletproof, where you have a liquidity sweep and you guys look and dissect the fair value gaps and price action, if price, I'll show you guys two beautiful examples. Okay, so again, get your notepad out, start taking notes, start studying price, okay? When you guys have a Fvgs gap present, we expect that Fvgs gap to push price higher. Very straightforward. This is a Fvgs gap. I see a lot of comments on my TikTok, on my Instagram. What is a Fvgs gap? This is a Fvgs gap when there's a gap in the market, okay? There is no Fvgs gaps here, okay? So you guys can study and find the common denominators of what I'm talking about. I don't want to waste too much of people's time. All right, you guys can watch ICT. Once you guys have studied ICT, come to me. All right, if you guys don't know the basics of Fvgs gaps, this is a Fvgs gap. There's a gap in the markets, right? If this wick was like this, there will be no Fvgs gaps. All right, now once we approach a high like this, we only have one weekly Fvgs gap. That is our contextual Fvgs gap. If this weekly Fvgs gap holds, then we understand price is going to take out this high here. All right, now if we approach the same thing here, we have this weekly, we have a swing low here. Now, if price is bearish, price is going to expand out of this low down here. Price is going to make new bearish fair value gaps where price can mitigate, retrace to just like this, and continue that expansion. If there's no Fvgs gaps, we understand price can potentially be reversing. Now, since this Fvgs gap has already done its job, I would deem this as invalid. I will not be looking for shorts. The only way I would be looking for shorts is if we sweep this IDR. What is an IDR? Inducement range. Inducement range is a swing high or a swing low. Okay, this is a swing point where there's no Fvgs gap, so we understand there is no order flow. There's no efficient order flow, so we understand price can sweep that high and then continue bearish. However, if we go to the daily, we can see that price is closing above, and we actually have a daily Fvgs gap. Like I said earlier, if there's Fvgs gaps, there is expansion. If there's no Fvgs gaps, there is no expansion, right? If there's a bearish and a bullish Fvgs gap, if you guys have a 50-50 bias, you guys will get chopped up. Understand that. Now, when price expands aggressively, there will be fair value gaps. These fair value gaps will be retraced and tapped into and continue that expansion above. Now, the SMC traders, what's happening here? Okay, let's dissect it. A lot of you guys are probably looking at this as a break of structure. You got a candle close, okay, break of structure, and you guys are probably targeting your 600R because you guys have been lied to, which is perfectly fine. That's why I'm here to cure it. I will assist in your trading transformation, and you guys probably have supply zones here, or this one here, with all the liquidity here and all that rubbish, and you guys will get chopped up and day in day out break even. Maybe you guys catch it, I don't know, or maybe you guys have this as a mark structure shift, or internal break of structure, whatever you guys call it, right? Doesn't matter. And you guys have this demand zone and never gets tapped, and it's a whole lot of headache. Skip all this. There's no need to be trading this, right? If you guys don't know how to play defense, you guys will always get chopped up. You guys need to play defense. Fool me once, shame on you. Fool me twice, shame on me. Okay? Keep that in mind. You guys need to understand how to play defense. Beautiful. But however, we had that daily fair value gap. If we go back, as this daily fair value gap expands price, we get that beautiful expansion. Okay? Daily fair value gap right there. Let's go back in the replay tool. Could use the 15-minute, whatever, right? And here is when you start looking for your trades. Okay, we understand this high is going to be taken out, previous day high, easy drawn liquidity, and what are you guys looking for is bullish fair value gaps. You got a bearish one here, and this is all within time. If you guys do not know about time, you guys should not be trading, period. Okay, and we wait for the expansion. You guys can take this fair value gap, perfectly fine. TP above this high, or you guys can partial and then let the trade run, right? If you have a daily fair value gap, the daily fair value gap with context is going to allow for beautiful expansions. Now, let's say you don't want to take this daily fair value gap, perfectly fine, right? You guys can always take the second fair value gap. Stop loss below the swing low here, or even here, perfectly fine. And the reason why we take these daily fair value gaps, and the reason why you guys need to look at the higher time frame fair value gaps and not be stuck in this 1 hour break of structure and 15-minute break of structure, 1 minute, it's all rubbish, right? Is we allow for the trades to run. And if they run, they're going to create new fair value gaps. They're going to create higher time frame fair value gaps, just like the weekly. Let's go back. As this trade is running, okay, you have this trade running. Let's say for whatever reason you guys have the instinct of it's going to take out this high, which isn't a bad instinct, right? You have fair value gaps supporting the idea. You will see price mitigating and creating new fair value gaps in the higher time frame to allow for that expansion. What happens as this fair value gap expands, it creates another fair value gap right here, which allows for you guys to actually understand price and continue high to this high here. So now you guys have all these trading opportunities to capitalize on the expansion. As I said earlier, if there's fair value gaps, the market is expanding. If the fair value gaps fail to expand and create new fair value gaps, manage your trades appropriately. Okay, that is very important. Your fair value gaps will be respected by news, election. This is all election, so you guys can trade after, perfectly fine. And you guys will continuously look for your fair value gap mitigations, expansions. You guys can look for liquidity, right? Because now you guys are all pro trend. You guys need to understand that. You guys are pro trend now. Once your fair value gaps have been respected, it's all pro trend to the high. Very easy. However, let's relate this back to supply and demand traders. They look at this break of structure. They have some sort of supply zone here, and they get wrecked. Simple, right? Or they're marking this as a demand zone. Let's even use this whole move down, and it never gets mitigated. Okay, they mark this as a demand break of structure, and they're shorting from this supply zone here. They've put the inducement right there. That's the A+ setup. Now, do you understand what I'm getting at? You guys need to understand where fair value gaps are, when they will be mitigated, and how you could catch the expansion. A lot of you traders need to avoid this parasite of supply and demand trading, right? It's just keeping you guys in this break-even loop. As I said earlier, once you guys break structure, I use that in quotation, there should be a fair value gap present. That is a break of structure quotation. All right. There's no fair value gaps, there is no trade. All right, that's your system now. There's no fair value gaps, there is no trade. Now, when you guys see fair value gaps no longer holding, that is a good area to release your profits, right? Again, I'm not a financial advisor. Manage your trades appropriately. But you guys will always have fair value gaps that are present, right? If this fair value gap does not hold and we start making bearish fair value gaps, then you guys understand that price can be retracing. Look at the monthly time frame, right? We have beautiful expansion on the monthly. Now, once we approach a high, we take the high, this monthly candle being indecisive, meaning it's no longer expanding, we jump down to the weekly. What do we have in the weekly? Okay, we have a weekly fair value gap present. Can this price action mitigate this weekly fair value gap? Absolutely you can, right? What's happening on the daily? Okay, there's not much on the daily. The daily isn't expanding price, okay? Interesting. So could we be reaching for that weekly fair value gap? We could be, right? The 4-hour fair value gaps are no longer holding to, right? And we aren't marking this as a break of structure. We allow for the accumulation to occur. Now, if price wants to continue that expansion, it's going to have to utilize the weekly to continue that expansion. If the weekly does not hold, then we can now be looking at other areas to target. Okay, very important.